Hey guys, let me update you about some great news related to Stellar. Yesterday, Stellar tweeted this. SDF recently convened a two-day event to connect leaders from Ukrainian financial institutions with experts from the blockchain industry. Learn more and access the expert presentations on the blog. And this here is a link to their blog article. Supporting Ukrainian financial institutions to leverage blockchain. Ukraine is at a formative point in its virtual asset journey. The bill of Ukraine on virtual assets is approaching a vote in the coming months. As financial institutions in the country prepare for the implications of new legislation, conversations that bring the public and private sector together are vital in order to build a thriving industry. With this in mind, we designed this event to provide practical information for key stakeholders and decision makers in Ukraine who will be involved in issuing, regulating, and developing infrastructure for virtual assets. Representatives from the National Bank, Ukrainian Parliament, and across the banking market were in attendance. What this could mean for Ukrainian financial institutions? The forthcoming legislation could provide clarity that guides the development of the country's virtual asset industry. When the door to innovation opens up, financial institutions may see new opportunities to utilize virtual assets to enhance offerings, introduce efficiencies, and build a more inclusive financial system. Key players in Ukraine will make consequential decisions that shape the country's virtual asset ecosystem in the months ahead. What business opportunities will they be able to pursue? How will they build the infrastructure to support new assets or services? This convening was designed to help stakeholders work through these types of questions and equip them with actionable information. Industry leaders building on Stellar shared real-world use cases and practical learnings on subjects like compliance, anti-money laundering, tokenization, and more. So Jason Lipala, who is Chief Operating Officer at Stellar Development Foundation, shared an overview of how the open source Stellar network works and what it can do. Stellar is designed so all the world's financial systems can work together on a single network. Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle, spoke about cross-border payments and provided an introduction to stablecoins, including a look at one of the largest, USDC. Circle is a leading digital financial services firm building treasury and payments infrastructure for the internet. David Carlisle, I think, Director of Policy and Regulatory Affairs at Elliptic, spoke about compliance and anti-money laundering, specifically how blockchain networks are being used and how to ensure compliance with country regulations. Elliptic provides analytics for crypto businesses and financial institutions to manage financial crime risk and achieve regulatory compliance. Simon Chantry, co-founder and Chief Information Officer at BIT, spoke about central bank digital currencies, or CBDCs, and digital currency management systems. BIT enables central banks, financial institutions, and other stakeholders to deploy, manage, and integrate with digital currencies on payment networks. Radko Albrecht, founder and CEO of Bitbond, spoke about fiat-backed stablecoin issuance, specifically the process from issuance to settlement and custody. Bitbond specializes in asset tokenization and digital asset custody technology for banks and financial intermediaries like real estate platforms and brokers. Patrick Campos, Chief Strategy Officer at Securency, spoke about virtual asset infrastructure and how to build rails on which value can be exchanged securely. Securrency automates compliance, streamlines financial transactions, and interconnects markets with open infrastructure. And finally, Craig McGregor, co-founder and CEO of D-Stock, provided an introduction into tokenization of non-currency assets and how this improves access to financial services. D-Stock uses tokenization and digital asset issuance to make investing accessible to anyone with a mobile phone. So, why public-private partnerships are crucial? Ultimately, our goal is to help Ukrainian leaders leverage blockchain technology to deliver meaningful infrastructure and solutions. Deployed correctly, blockchain can benefit the local economy and end users without sacrificing oversight, accountability, or regulation. This is why it is critical for the private sector to engage with the public sector to ensure that legislation balances the need for new and improved financial rails with the need to guard against innovations that empower illicit actors. When public and private sector leaders share the desire to get this right, it's possible to deliver on innovation that will be transformative. Okay, and you can access expert presentations from the event. I will leave a link to this blog article, and also I will leave a link to to these videos with the presentations in the description under the video. And to finish this video, I want to show you one clip from the Bank for International Settlements, in which they are talking about CBDCs. So this is from today, so let's watch it.
You can think of CBDCs as a digital form of cash. At the moment, digital payments available to ordinary users go through financial intermediaries like commercial banks. When you make a payment, you're transferring a claim on your bank to the receiver's balance at his or her bank. With CBDCs, you could pay someone just as you would by handing over cash, but do it digitally using your smartphone or other devices. CBDCs are a claim on the central bank, which means that the payment is certain and final without leaving things to intermediaries to complete the transaction. And just like cash, CBDCs would also serve as a salient marker of the trust and sound money provided by the central bank. Due to their construction at the core of the system, CBDCs could offer a number of advantages that flow from the centrality of data in the digital economy. For instance, they can help in setting up an inclusive and efficient payment system by allowing data use to promote a competitive level playing field. They can also protect privacy while maintaining integrity of the payment system and law enforcement. It would be fair to say that CBDCs are an idea whose time has come, and we can see it from various surveys conducted by the BIS. If they're done right, CBDCs could form the backbone of a highly efficient new digital payment system by enabling broad access and providing strong data governance and privacy standards.
It would be fair to say that CBDCs are an idea whose time has come. Very powerful words there. Okay guys, thank you very much for watching. That was all for today. Please like, subscribe and share this video. Be safe and see you next time.